when you've got any flexible income, bonus, commission, and self-employed borrowers, we take a 2-year average. And that's what Ashlyn's saying is if you're, because we're going to average 2 years of taxes, so before you get them actually filed with the IRS, maybe you want to massage them a little bit. And between what your goals are for this year, we can hopefully help you massage those. Hi everyone, Lori Anderson,
Ashlynn
Kelso.
I know, you said your last name, so I was like, okay.
Mortgages and mimosas.
Yes, so what are we talking about today?
Taxes.
Yes, it is time. Everybody's starting to get their W-2s or their 1099s, depending on like what you do for a living. And so it's time to pay the IRS what they feel they are owed.
I know, and then it's time to what? To go through all the paperwork, get it all together, get it all to the CPA, and guess what? Sometimes you're damned if you do, damned if you don't. Damned if you write it off, but then damn you don't show any money on your tax return.
Yes, so
two-edged sword.
So what we want to really say on this one is if you are self-employed and you are thinking about buying a home this year, or a second home or an investment property, if you are looking to get a mortgage or refinance or anything like that, once you get your taxes pretty much ready to send off to IRS, like whether it's you're doing them on your own or you're with your CPA, if you want to see how a lender calculates the income from those business tax returns, or if you're Schedule C 1099, feel free to reach out to us and send us a copy for us to review, because we can show you how we calculate it. There's also things that we can add back to your income, because most times people probably know or assume we look at the net income of the business when we qualify, not what your gross is. So, but when we look at the net, there's different deductions and expenses that we can add back to your income. So business miles is one of those big ones. I'm always like, you can have depreciation. So we could give you some of those that are like the good expenses that we can add back, but that way you at least know, like, is this, am I writing off too much? I mean, we're not gonna do your taxes, we're having you bring them to us once they're ready to go, but at least you know.
Well, and again, and that's what I was saying is your tax person's trying to save you the most amount of money in taxes that they can. And when you've got any flexible income, bonus, commission, and self-employed borrowers, we take a 2-year average. And that's what Ashlyn's saying is if you're, because we're gonna average 2 years of taxes, so before you get them actually filed with the IRS, maybe you wanna massage them a little bit, and between what your goals are for this year, we can hopefully help you massage those in a way that it's not gonna be too detrimental one way, but then help you on the other side.
Yeah, and so it may, and again, the CPA is doing you all a favor, hopefully does us a favor when we file our taxes. But again, if you're looking to buy this year, it may be the year that you're like, okay, hey, and let your CPA know too. Like, I'm looking to buy a house this year. Let's look at these write-offs and what I do want to write off, what I don't want to write off, because you're not required to write everything off. Because I mean, obviously, the less that you write off, the more you're going to be paying to IRS. So anyway, that's what we wanted to cover today.
Well, wait a minute, Ashlynn.
Oh, is there more?
Tax return refunds.
Oh yes. So hopefully,
so maybe you're a W-2.
I know.
You don't have to mess with it.
You already paid all year. So,
and you've got a refund coming.
Yeah. So if you are thinking about buying a house, to Lori's point, this year, and you're getting that refund, maybe it'll be enough for you to have that down payment, and but hang on to it. Don't go spend it.
I know. Well,
Save that money.
and that's the other thing is if you haven't had your annual mortgage checkup with either one of us, that's why here we are at the first of the year, and what are my goals this year, and am I going to get into a mortgage, and what do I do, and what do I do with my refund? How do I handle the taxes? All that type of things. Reach out to us.
Yeah. I'm going to go back to self-employed really quick.
Okay.
One of the things that, if, like you said, if we're taking a 2-year average of your taxes, also look and see what your net income was last year compared to this year, or to from taxes in 22 and 23. Because if there is a decrease, your gross may have increased from 22 to 23. So the business may have made more. But if that net income is less than 23, then we actually have to take a 12-month average and use that lower. So again, those are just, things that if you want us to take a look and review those taxes with you, it is free of charge. We're more than happy to do that, as long as you use us for your mortgage when the time comes. But anyway, so yeah, we would love to help, but yeah, it's tax tax filing time.
Yeah, the first 3 or 4 months of from now
Yeah.
till April, everybody's like, oh, it's tax time.
Yeah, so if you see a CPA, out
Give
and
him a
about,
hug.
yeah, buy him a drink. All right, so have a great weekend.
You too, bye.